Hey, Small Axe people, it's Nico. I want to teach you how to buy buildings, build empires. That's what I do, guys. I am a teacher. Over 20 years, I've been teaching and educating others. So now I do the same thing with multifamily real estate. Right now, you can go to my Stan store. That's my website, essentially, stan.store/, buy buildings. And there you're going to find so many different resources. Whether you are brand new or an experienced operator, I have things for you on that Stand store. So go check it out. But most specifically, if you're looking to get involved quickly and you're ready to be involved with a powerful team and a powerful group of people doing deals, then you should join the multifamily machine. The next cohort number 3, guys, already is coming up in May. So make sure you go there, you sign up today because right now it's at a discount and it will not be at a discount in the future. And there's plenty of groups that charge 10 or 20 times what I charge. I promise you, you will not be let down if you join the multifamily machine. Go check it out today on my Stan store, stan.store/buy buildings. Now, let's get right into the episode. I want to talk about raising capital. I love raising capital. JK, I hate it. And more specifically, though, I want to talk about what it's like, what the raising capital environment is like today, because I could tell you that it is not the same that it was 3, 4, 5, 6 years ago. Back then, you could bring a deal to someone and walk them through the numbers or talk about the upside or not even talk about numbers sometimes. Sometimes it was just a conversation about the market, the location, maybe the momentum that you had from another deal, or there was some great national news about multifamily housing, or the interest rates were so low that people were just more willing to jump in and invest. Limited partners in deals 4, 5, 6 years ago saw really good returns really quickly and were more apt to continue doing that because capital will follow the returns. Today, the returns are skeptical. And there was this general belief that things were going to keep improving. So again, people were just investing and investing, which was wonderful to get deals done. But that's not what I am seeing today. If I bring a deal to somebody, the conversations just don't happen. I get ghosted. People don't care, don't want to see. And I also get a lot of stories about people losing money on their deals. And I get a lot of stories of capital calls. And I have many stories as well of people losing 100% of their capital. That's where it becomes really difficult. Out of the hundreds of investors that I thought were investors, maybe 1 to 2% of them are still looking at deals. So, me personally, I do not want to do any capital raising today. Not that I ever did, but today, even less than what I wanted to do in the past, because I feel like it is literally impossible and something that is intimidating for me today. And I just don't want to do it. I don't want to get involved. Let's say I reach out to somebody and they do respond. Well, the conversations are still slower. There are more questions, more hesitation, people talking about, and people taking way more time to make their decision. Some people just decide to sit on the sidelines altogether, and I don't blame them, guys. Investors have seen a lot over the past few years. And even the people that didn't lose money, maybe they're still in deals that are just going south. Maybe the rents aren't growing, the expenses are higher, occupancy is down. Maybe the refinance that they thought they were going to get just couldn't work out. So naturally, people are looking at things differently. They're not just focused on the upside. They're thinking about what could go wrong, which is nice. They should be. They should have always been thinking that. But we were all so optimistic with the market just 3, 4 years ago. And today, it is not the same environment. But in all honesty, it is a much healthier environment today because things are normalizing, stabilizing. But in all honesty, it's actually a healthier environment today. Yes, expenses are up, but things are normalizing, things are stabilizing, and that's good. So if you're somebody that's raising capital, you have to show up very differently. It's not about getting excited anymore. It's about being clear. It's about being able to walk somebody through a deal and say, this is why I like it. This is where the risk is. And this is how I'm thinking about the risk. And that's a pretty different conversation than what a lot of people were getting used to during the easier part of this market cycle. And for me personally, I am having those conversations right now while also dealing with real operational pressure. I've got properties that are performing well, but I also have properties that are tight. I've got bridge loans out. I've got timelines I need to hit. So when I'm talking to investors, I'm not coming from some polished, perfect world or perfect position. I'm speaking from what's actually happening. And it makes it really challenging for somebody to want to invest with me if I am struggling as an operator. But what I do find is that if you are really straightforward about presenting the risks, and somebody knows the game of real estate and understands the market and understands the cycle that we're in, and you're presenting those risks to the right person in the right way, some of those people will invest. Me personally, I would still be investing today if I had the capital. Of course, I understand how deals work and I understand the risk involved, but I also feel that I'm pretty good at this point at projecting out a pro forma with stress testing it and understanding that we need to fix the rate for the next 3 to 5 years and we're going to see better days. But let's be a little bit more conservative, maybe 15% vacancy when we're underwriting, maybe lower rents rather than increasing rents, and make sure that expenses are still going up throughout this time period. And what that does for me as a potential buyer is it really hinders my purchase price. My purchase prices are way down. I'm at like 50%, sometimes even less of asking price. And what does that mean? A seller's not going to sell to me unless they are distressed or severely distressed. And at that point, then it's like a battle between somebody that's willing to pay a little bit more than me or me taking it over. And it's very tough today. And I never loved the capital raise aspect, but today I am terrified of it because the past two deals that I put together was really difficult for me to find the equity for it. And I just don't want to be in that position again. It's really tough. But I do want deals, and I do understand that today is the best buying opportunity that I have personally seen in my lifetime or in my adult investing career. So those people that are willing to have conversations with you still, that are still talking about the deals, they understand that this is a real business. They understand that things don't go perfectly. It's not a lottery. You don't just get to jump in and get free money. They understand this. And those are the people that are more focused on how you think and how you operate than just what the numbers look like on paper. They will know a good deal when they see a good deal. So present it to people. Don't be afraid to continue presenting. And this advice goes to me as well, because I need to continue acquiring deals if I ever intend on hitting my goal of $2 million in equity in multifamily deals. And I think that this is where a lot of the newer investors and operators get tripped up. They assume that if they just find the right deal, the money will come. But the deal is only part of it. What also matters just as much is how you communicate the deal, how you think it through, and how honest you are about what you are presenting to someone. Because at the end of the day, people are investing in you, not just the spreadsheet. And right now, people are paying a lot more attention to that. They're asking who you are, how you handle pressure, whether you've been through something like this before, what have you done in the past, what is your track record like? Are you still able to make distributions in today's environment? And on and on and on. And those aren't things that you can fake. You earn that by being in the game and by how you show up over time. So, yeah, it's tough today, but don't stop, my peeps. Don't you dare stop. We're going to continue pressing forward. So, if you're out there trying to raise capital right now and it feels harder than you expected, that's not a sign that something's wrong. That's just the reality of the market that we are in. And honestly, there's a big upside to that. Because if you can learn how to raise capital in this environment, if you can have real conversations, build trust, and get people comfortable with deals that are not necessarily perfect, then you're building a skill and an investor base that's actually going to matter, that's going to last you your lifetime. When things loosen up again, and they will at some point, you are going to be way ahead of the people who only showed up when it was easy. The people who disappear right now were never really committed to this business. The ones who stay in it, who keep having conversations and keep improving how they present deals, those are the ones who end up building something real. So together, this is you and me now. We have to continue having conversations with potential investors, potential partners, and potential sellers. We have to remain active. You cannot skimp out on your current portfolio and your current operations. Absolutely not. So, yeah, it's not easy. You're adding more to your plate as an operator and more to your plate as a capital raiser, more to your plate as an acquisition specialist, more to your plate as an underwriter. Handle it, deal with it, And just to be clear, guys, I'm not saying this from the sidelines. I'm in it too. Okay. I've got pressure all over the place. I've got decisions to make. I've got investors that I care about. So I take this very seriously. And I try to show up in that way with every conversation that I have. That's the job. All right. That's all I've got for today. And if you guys like this episode, it would literally mean the world to me if you would subscribe, leave a rating, write a review, share this with somebody that you think could get some value, and stay in the game, guys. Keep getting better, and I will catch you on the next episode.